Okay. Oh, okay, I got it. I think it will work now. Okay, I think we fixed it. Finally, I fixed the technical issues. The wrong settings for the camera. So let me get rid of that. The sound should be better now. Let me get a little bit of coffee. Thank you, everybody, to our second live stream of Sound Money Investing. I will welcome anyone who joins us. I'll try to live stream as long as I can to give the possibility to people to join in. There's not a lot of people who have seen our videos. I just started this YouTube channel, so it would be fun if we see a few people here. I don't know if Ty Myers is there from what I see on the live stream, so say hi if you're there, just as a test to see if everything's going well. I'm based in Canada, for those who wanted to know. I'm curious to know also where you're connecting from. Trying to build a community here for sound money investing in general, but focusing in this channel with sound money investing. As you see here, videos, we just have a few, 6 on the last one, a couple on the previous 2, no videos on no views on this one, and 7 on our first update of gold, silver, and Bitcoin on the 15th of March. So the algorithm is suggesting a little bit our videos. I'm not expecting major traffic early on. It is a long game when you start or you're building YouTube channels. So gradually we'll contact a lot more people, get them involved, and we'll see where it goes. So let me just try and see. I want to do something here just to do a test. Welcome everyone. If you want, share where you're connecting from, and ask any question. Investing or reinvesting in. Can we pin this? Pin message. Okay. Let's get back to the thing. Oh, somebody joined in, I think. So I just pinned a message for everybody. Let's see how it goes. So let's continue. Like I indicated, we just have 6 videos. We just starting the channel. I'm trying to get used to all the softwares and everything related to that. And trying to see how I can be, I guess, a little more efficient. Let me just adjust this a little bit. I just want to do something here. Trying to optimize. No, it doesn't work. Trying to optimize the time, keep people engaged, share my approach. It's not financial advice. It's just sharing what I've been doing since January of 2026. Investing has been quite difficult. Working environment for people is tough. Inflation for people is tough. Investing for people has been tough. So yes, try to find positive pockets of news and things here to share in order to keep the investing journey going. So this is the overall message that I have. So let's start. Like I indicated, we just have a few videos. Now we have this live stream today. I set up another live stream tomorrow. I think it's a little early. I think it's 9 a.m. on Sunday. I wanted to put it early to be able to catch people from Europe and around the world, and also try to extend the time of the live stream in order for people to catch the live stream, join in without notice, simply because we don't have like subscribers. If we don't have subscribers, when I don't know exactly how YouTube shares this thumbnail and everything related to the live streams when there's not a lot of subscribers. So I'm trying to be on when the live stream is on for the longest period of time possible. I'm trying to also see if I can combine the live stream with other platforms, with the vertical format that YouTube have. There's a bunch of things that I'm trying to learn in the background. I'm doing this on my own, so I have the liberty to do pretty much what I want with the channel. It's a one-person team, so it's going to be gradual. Just give me a chance here to be optimal with the different softwares that I'm using. I'm using OBS for the live stream, so free open source software. So I'm trying to learn that. You saw the earlier that I couldn't put it on the screen here, but this will be fixed, and it's going to go smoother and smoother. So let's go. Welcome to those who are there. Like indicated, the pinned comment says share if you where you're from and questions you have about investing. I have my phone here on the side. I haven't set it up in the screen here so I can see in my computer. So I have access to all the different comments, and I'll answer any questions you may have on sound money investing, but also investing in general for beginner levels, intermediate people, and maybe even some advanced questions that we may get. If I don't know the answer, I will tell you that I don't know the answer, and I'll look into it to the best of my abilities. But usually the questions that I get, I'm able to pretty much at least guide people and give my overview on that specific subject. Okay. First, sound money investing. Some people don't even know what it is. So we have traditional investing where we, people invest in bonds, stocks, traditional things. This is like more like a traditional way of investing. Sound money investing is a little more um, niche, I would say, a little more modern in terms of investing. Sound money investing is related to assets that are rarer, that cannot be diluted as much. As many people know, you have like your Apple stock or Tesla stock or any particular stock that you like. Well, all these companies have the flexibility to issue more shares and therefore dilute the value of each single unit of a share within the company. All companies have that um, ability. Some decide to actually buy back their stock and reduce the number of shares, so therefore they become rare. But all these decisions are made by the company itself. Investors pretty much have limited options in terms of stopping the company from doing it, and you're pretty much I decide to keep investing in the company or stop investing in the company. There's also other assets which are sound money, which are more related to commodities. So we're talking about mainly gold and silver, who have been used for many, many, many years. In terms of monetary, but also trading purposes, investing purposes. And why are they tagged sound money? It's simply because now these days we have diamonds that can be found on the ground, but there's also companies who are manufacturing or making synthetic diamonds that cannot be done with gold and silver. Therefore, we are limited by the total amount of gold or the total amount of silver available in the market, and it sets a rarity premium to those assets, and that is sound money. So, if for whatever reason a lot of people want to buy gold, we cannot print more gold, we cannot print more silver, we cannot create it. We can go and mine more because the price is higher, but immediately we do not have more gold or silver available in the market. Therefore, it's a scarce asset, it's a rare asset, and it clashes with the definition that I showed you before about stocks, where the company can decide most of the time to create more shares and dilute investors instead of destroying shares and give value back to investors. So this is the major difference between sound money assets versus normal investing assets. Now, let's talk about currencies. Currencies, the US dollar, the Canadian dollar, or any other currency in the world. Governments have similar power as the CEOs of these companies. They can decide to print or destroy currency, remove currency from the market. Most of the time, most countries, most economies are printing and printing and printing more money every single year. And that doesn't change the numerical value of your $20 or $100 bill. That does not change. What changes is the purchasing power. What can you buy with that specific currency. With $20, you buy less and less things. With the $100, also you buy less and less things. And that is due to the debasement of that currency. So for example, and I'm going to give you this example. Many people are surprised when I talk about this example, but when you buy a house, and let's say you buy a house in January of 2025, so 1 year ago, or we're the 28th of March 2026 today, let's say on the 28th of March 2025 you bought a house and the price of the house was $100,000. Okay, that was the price that you paid, and then 1 year later today you ask the bank, or you look and you try to see how much your house is valued at. And now let's say the house is valued at $110,000. So it has gone up by $10,000 or 10%. But the owner has lived in the house for 1 year. Therefore, they use the house for 1 year. Some things may be due for replacement, others not. But the house is older, and if that person has not invested in the house, has not changed anything, has not renovated anything, the house is 1 year older. And the tendency of houses is to decay over time. If you don't take care of them, they're going to turn into ashes if you don't take care of them. So 1 year goes by, the value of the house goes up by 10%, but you did not put any modifications to the house to make it newer, and you have used it for a year. Why did the house go up by 10%? It went up by 10% because the currency in which you are evaluating your house was debased most probably by 10%. I'm simplifying the example, but that's pretty much it. So normally the value of the house should go down a little bit because you used it. It protected you for 1 year. It allowed you to sleep for 1 year. So technically you used it. Eventually you will have renovations to do on that specific house, but it went up in value without doing anything. That's why people believe that a house is an investment. Technically it's not, because you have to invest in the house to keep it in good shape. Because if not, yes, it will decay, and then you may lose all your initial amount of money that you put in. So over time, houses' values go up in an inverse relation with the debasement. The more the government prints dollars of the currency in which you bought the house, the higher the increase in value of the house will go. That is the debasement impact reflected in your house. And that's how you know how debasement works within your country. Obviously, if you made big renovations to your house and you added an extra room, or the basement is now a living space and it wasn't before, then you may increase the value of the house, but you need to put money into it. It's going to cost you an X amount of money to upgrade the house, add something to it, and that will be reflected in the value. That, yes, can happen. But if you're not doing anything to the house and it goes up, it's mainly due to the debasement of the currency in which you're evaluating your house. So we talk about gold, we talk about silver, the two differences between gold and silver. Gold has been used as a value asset for a long time. Before it was used for trading purposes, now way less. It's more for protecting the value of your money. That's how gold is used. Now, silver is also rare. We cannot generate more silver than what is mined. Limited amount of mining is exclusively linked to silver, and quite a lot of mining is silver is a derived mineral coming from other mining facilities, either of gold facilities or copper facilities. That's the first thing. The gold market is way bigger than the silver market. Second point. And also, historically, gold has been a little more stable in terms of its progression in price to the upside and to the downside. And silver is it's a lot more volatile. So these are the things that you need to know. In terms of silver, the same thing. We cannot print more silver. We cannot generate silver synthetically. That is impossible to do. So we need to mine more in order to increase the supply of silver. However, silver is a manufacturing element. It is used in many industries, and very little of it is recycled back as a new silver coming into the market. So generally it is used, and that's pretty much it. It's used in electric panels, it's used in batteries, it's used in electric vehicles, it's used in electronics. Quite a lot of uses for silver. And there's not many elements. Some people talk about the copper that can be replacing silver eventually, but the characteristics of silver are optimal, meaning high conductivity, and it does not corrode. It doesn't rust compared to copper. So if you put copper in electronics, you may have issues in the long term due to the presence of humidity over time in those electronic devices. This issue is not a problem if you're using silver. So there's a lot of manufacturing that is done in silver. Therefore, most of the silver mined is used in manufacturing, and therefore we have a deficit in terms of the amount of silver that we need each year, and that has an impact on the price. And we cannot print anything and generate anything related to silver synthetically, therefore it's a sound money asset. And finally, the last item that I want to cover that less people know about is digital gold, which is Bitcoin. And Bitcoin is a completely different beast than gold and silver. It's completely new For investors, it's been around 17 years, but let's say people have been getting news of Bitcoin regularly, let's say in the last maybe 2 3 years max. Before that, very very little, very little, very low amount of people knew about Bitcoin. It's still quite complicated in terms of accessing Bitcoin, getting used to uh, buy and sell Bitcoin. Technologically, it's a little challenging for most people. A lot less now because we have new financial tools that allow us to have an exposure to Bitcoin. But for most of the population, uh, people haven't heard of them. I have been learning about Bitcoin now for more than 4 years, so I have completed a full cycle. I'm on my fifth year of Bitcoin, and I live in Canada. And in the last 5 years, I think one person talked to me about Bitcoin in all that time. One. In a 5 year period. Just telling you how uh, limited or how little the population knows about Bitcoin. So Bitcoin, it's pretty much like gold, but in a digital form, and that's what it makes it a little more powerful, in my opinion, in financial advice, than gold. And I'll compare a few things between gold and silver. Keep in mind, one is electronic, the other one is a real asset. One you can touch, the other you can't. And most of the gold investors are going to tell you that that difference is enough for them to not touch Bitcoin. I understand that. I don't mind that. Um, but I am a little more open-minded in terms of the different assets that I can invest in. So that's why I am looking into Bitcoin. So, like I said, gold is quite rare, and Bitcoin is the first ever asset. Talk about physical asset, digital asset, stock, bond, any type of investment, real estate, anything that you can invest in that is in a fixed supply. It was created with a total in mind, a fixed amount of unities. Okay? To simplify things, let's say that the group of people who created Bitcoin program within the software that only 21 million shares would be used. And the use of shares is not necessarily very accurate because each unit can be divided, I think it's in six or eight digits, 0.00006 zeros or 8 zeros. Don't quote me on that, but it's divisible to, I think it's 10 million units or something like that. Quite a lot. You cannot divide gold indefinitely. You have to be able to weigh it. And there's always issues with gold in terms of determine if gold is real versus what is not. In terms of Bitcoin, it was programmed to have 21 million units, divisible units, and the software, call it software, generates this supply since inception. Every 10 minutes, we combine transactions, we verify transactions within the system, and as a reward, X amount of Bitcoin are released in the market. In 2026, right now, 20 million of the 21 million Bitcoin have been released from the program. And I believe the last million, it's going to take something above 100 years to release the remaining 1 million Bitcoin to the market. So Bitcoin has a cap supply. 21 million, that's it. The program cannot add more. And obviously, all the people who are invested in Bitcoin do not have an incentive to modify. There's ways of modifying the original software to increase the number, but you have to have consensus, meaning that you have to have a higher percentage of the owners of Bitcoin that have a vote that will allow to increase the amount of Bitcoin. At this stage in 2026, I believe that that will not happen. It's practically impossible to get the amount of votes necessary to increase the amount of Bitcoin. And the first incentive and why people will not agree to that is because as soon as you generate more Bitcoins, you're actually doing like a CEO, generating more shares of a stock. You dilute the value of each Bitcoin or each fraction of Bitcoin by the amount that is going to be created. Therefore, there's no incentive, there's no logical, or there's no positive view of adding more Bitcoin. So that will not happen. So it is capped at 21 million, okay? And you have to be technically savvy to transfer Bitcoin from one spot to another, to exchange and buy something in Bitcoin if you ever do, for a good or a service. Okay, you have to know what you're doing. Why? Because if you do an error or make a mistake, you lose that fraction of Bitcoin or a whole Bitcoin if you transact the whole Bitcoin, for example. And there's no help desk. There's no there's not going to be anyone helping you fix the issue if you send Bitcoin to the wrong portal, to the wrong place. You simply lose it, okay? And that's it. So since the start of Bitcoin, which I think 17 years ago, people have estimated that 5 or 6 million Bitcoin out of the 21 total have already been lost. Meaning that we're technically working with 14 million or so, and then there's 1 million to be released into the market. So 14 million Bitcoin for the whole market, for the whole population. Okay, and there's a company right now in the stock market called STRC who's approaching 800,000 Bitcoin in one company. So they are approaching 1 million Bitcoin out of the 14 million that I believe are currently available. So it's a very scarce asset. Very, very rare. You cannot print more, and every single day there's people losing Bitcoin. If they lose Bitcoin, the supply goes down, And when the demand comes back or continues to be consistently um, more and more, the price will eventually have to go up. And like I indicated, there's no way to print more. Therefore, if you become an owner of Bitcoin, then you have a piece of those 15 million Bitcoin. And if you don't want to sell it, nobody will force you to sell it. And that Bitcoin is not available for anybody after you until you decide to sell that Bitcoin. That's the first thing. The other thing that is quite powerful with Bitcoin is that each unit has a proportional value of whatever the price of Bitcoin is at the time. Right now we're at something like 70,000. I think we're a little under $70,000 per Bitcoin. That's the value right now, but it could double, it could triple depending on what the demand is and the availability of Bitcoin in the market. You can send millions of dollars from one digital location to another digital location in any country in the world, as long as both locations are compatible with Bitcoin. And it will cost you, I think it's below $1 or maybe a little bit over a few dollars, let's say a few dollars. I haven't really done it, so I don't know exactly what the fees are, but let's say it's $10. It's less than that, but let's say it's $10. You want to send $1 million in Bitcoin from, let's say, Canada to Japan. Let me just pick a random country. Okay, you send it. You have a friend there, and you're exchanging Bitcoin. You send them, for example, one Bitcoin. Within 10-15 minutes, well, technically immediately, he will receive the Bitcoin, the $1 million worth of Bitcoin. He will receive it immediately. In the background, there's verifications that are being done, and eventually 10 to 30 minutes after that, the transaction is official, and it's going to cost you $10. So 1 million transfer to Japan, 10 to 30 minutes, and it's done. You don't need a bank, you don't need anybody. As long as you do it compatibly, you're not going to have any issues. You pay a little fee, and it's done. Okay? If you try to do the same transaction from a bank in Canada to a bank in Japan, it's going to take you weeks and months and a lot of paperwork. This does not happen with Bitcoin. You're going to be bombarded with questions as to where is this money coming from? Where are you sending it? What are the reasons for it? Blah, blah, blah. It's endless. And you may end up not being able to transfer that money. Quite difficult. And this is cash in your currency. Okay? Now, let's move to silver or gold. $1 million of silver or $1 million of gold, send that amount to Japan. It's also going to be super painful. Why? Because silver and gold are heavy. It's going to cost you a lot in transportation, a lot in security, and a lot of time in terms of paperwork. Even though gold, silver, and Bitcoin are sound money elements, this is a big deal in terms of Bitcoin. You can move around it, you can send it, and it's very, very quick and fast, and you avoid all the paperwork. So that is quite important. And the other thing that is quite powerful in terms of Bitcoin, you can have your Bitcoin on your phone and nobody has access to it. If you protect it, nobody, even if they take control of your phone, can have access to your Bitcoin because there's security ways to block that access. Gold is linked to an account somewhere and it can be seized. Silver is linked to an account and it can be seized. So you have that flexibility to move around with your Bitcoin anywhere in the world quite easily. So these are quite important details related to sound money elements, gold, silver, and Bitcoin. That's why I started the channel, and that's why I believe everybody needs to have these three elements: gold, silver, and Bitcoin. You can have other things too in terms of diversification, but I believe that everybody needs to have access to these three sound money elements because of their characteristics. But I believe that people need to have and need to learn about Bitcoin because I personally believe that it is the true, the most sound money asset out there. Nobody has created anything like that. It is extremely rare because of its characteristics, and therefore it has some value in your portfolio. Okay, so that covers why the sound money investing. Let's go over now the market. The week was quite red. Turmoil in the Middle East continues. People believe, I think today, yes, today exactly, it's the 1 month anniversary of the initiation of the Middle East conflict. It was supposed to be a couple of weeks. Now it's a month. Now people are starting to think that it could be a 6 month to 1 year conflict. All the oil prices are going up, and it's going to stay that way for a while. Markets are reacting. People are turning and selling their assets and putting them in oil, gold, cash to protect themselves from a longer conflict. And that has been reflected in the stock market. It has been difficult since January, but it's getting even worse right now. You see the last trading day, Dow Jones down 1.73, S&P 500 down 1.67. That's just 1 day. Nasdaq down 2%. So talks have been effective. Fear index is going up. Now oil up 7%, the Brent up 6%, natural gas up 3.65%. So oil and oil related assets are going up. Commodities, I believe that 2026 will be a year of commodities. There's going to be a lot of people rotating from S&P 500 ETFs to commodity ETFs for this specific reason, because people need to protect their buying power. So gold yesterday was up 2.59%, silver 2.7%, copper was flat, platinum slightly up, palladium almost 2%. So people are rotating, and they're going to rotate more and more because of the the duration of the conflict. We don't see a solution or a near-term solution anytime soon, and therefore people are reacting to their portfolio going down. In terms of crypto, you see here Bitcoin is up 1.3%, Ethereum is up 1.7%, Solana almost 1%. Meme coins, who I don't really recommend at this time, not financial advice, up 3.84%. In terms of Doge, XRP, I would highly advise people to avoid it completely. So I will not mention too much. Let's look at, oh, it doesn't show here. Yes. And bonds, you see a 10-year, US 10-year going up. That's not good. Japan 10-year going up, the UK 10-year going up, and the French 10-year going up also. That covers the, last week has been quite red, a lot of sell-off, quite a lot of uncertainty. Even gold corrected quite a bit. So we are trying to get back into a more stable situation for the assets. But every tweet from the president or any news from the Middle East triggers a push up in price or push down in price, especially on Bitcoin, because it's traded 24/7, and then it's reflected in the markets from Monday to Friday on trading hours. Let me go to Finviz. We're just going to see what the weekly charts. No, futures, I think it was. Maps. Yes, that's what I wanted to see. Last week. See here, S&P 500 minus 2.2% for the whole week. The Nasdaq 100 minus 3%. That's a big drop for a specific week. Gold, even though it went up on Friday, was down 1.79%. Silver was up 0.19%. Copper up 2.23%. And in terms of oil, crude oil up 1.44. It had come down a little bit when peace talks or discussions were reported during the week, but now on Friday that was reversed, and now oil and oil-related assets are bouncing back up. So that has reversed quite a bit. Now quickly, let's have a look at the charts. going over gold, silver, Bitcoin, and then I'm gonna wait and see if people join in for specific questions that they may have. So let me just see if I can increase how big this thing goes. Let's check. Let's see if the chart can be a little bigger. Let me see. Does it make it bigger or not? Okay, let's put it like that. So this is the weekly chart of gold. Again, the last 3 weeks have been rough, corrected quite a bit, and now the last week was quite positive. And positive, why positive? Simply because we have this type of candle here. You see it is a we went as down as $4,000 100, but we finish at $4,495, meaning that all the lower part of the candle is buyers coming in and start to buy gold again. And that gives you an indication that people are interested in gold at these prices. So this will most probably allow a gold to establish a new base here before potentially going higher. Not financial advice again. And why do I like to work with charts? Welcome to those who are joining the live stream. Look at the pinned comment and comment if you like the content. So why do I look to look at charts, and why? Yes, I do check the news overall, but I don't put a lot of time in terms of news and analyzing news in terms of events for me buying and selling. It influences my decisions if that news has an impact of 6 months, a year, or more. But if not, it has very, very little impact. Why? Because these charts, daily charts and weekly charts, give you a reading of what buyers and sellers, total buyers and total sellers, are doing right now. And that reflects bots trading in the background, bots analyzing news and reacting to the news and trading on the market, retail investors, institutional investors, insiders, non-insiders, big players, small players, everything is in the chart. So that simplifies the analysis because everything is there. So I'm looking at big tendencies, but also I'm looking at a long-term thesis or a specific plan, which means that in our case, I believe that investing in sound money assets is a very, very good idea. Why is that? Because all governments, I don't know of any government right now who is not printing money. Therefore, devaluating their currency to be able to pay their debts. And that debasement will impact all the holders of those currencies. And if you don't have assets that protect you from that debasement and give you a return better than the debasement rate, then you're losing buying power. So if a country, whatever X country, is devaluating their currency by 10%, you should aim to be an asset that grow by 15-20%. 10% will just keep you at the same level. 15% will give you 5% return, and 20% will give you 10% return on your buying power. So you're increasing your buying power by 5% or 10% if you have a total return of 20%. If you don't have that, you are getting poorer and poorer by the year, depending on your country. And that's the whole thesis. So, do I believe long-term gold will continue to go up? The answer is yes. Will it have cycles of up and down? The answer is yes. Unless governments starts to tighten their finances and avoid printing money to pay their debts, this overall thesis will stay intact. And that's why in my portfolio I have gold related investments, silver related investments, and Bitcoin related investments. And yes, I have others, but these three are going to be my core in my portfolio for a very, very long time. Why? Because of that thesis. So, right now, we have gold has had a very huge run, and now it has corrected. It's normal. People take profits eventually. We have seen small corrections here and there in gold before. We've seen it here, and then the price resumed to the upside. I'm expecting the same thing to happen here. As you will see in my charts, I keep it fairly simple. The moving averages here are usually what I use. You see here right now that we were approaching this moving average, the 50 SMA on the weekly chart, and we bounced back, meaning there's buyers here like I indicated. We will see where it settles, and this moving average every single week will continue to go up as long as we bounce a little bit here. It's going to continue to go up, and it will act as a support to push the price eventually higher. Not financial advice. This is the current situation for silver. Gold, sorry. Now, let's have a look at silver. And silver is a little bit similar, but with a higher price movement because silver is more volatile. Again, silver has had a huge run. We peaked at 120%. And if you look here, this is something you can use in trading view. You put it near the max like this. You bring it down. Whoops. You bring it. Whoops. Bring it down to the bottom here. Open the candle like this. And you see here, we went as high as $121, came down to a base here recently at 61, and that corresponds to minus 49.42%. Well, how convenient is that? Well, that's a 50% correction. And what do buyers when they see a 50% correction, they get in. It has corrected enough. Let's start to come back in silver. So those people who took profits, I wouldn't say if they all sold between 120 and 121. That's not true. But quite a few people sold between 110 and 121. Invested their money in something else or kept it in cash and then said, you know what, I'm going to wait and see if this thing corrects and I'll get back in. And I can tell you, there's a lot of people who took the top here and said, okay, I'm going to put a price around $61. Maybe they put it at 63, 64, 65, something like that. And put buy orders there and just waited until the price corrected to those levels. And now they're starting to accumulate. And we start to see here, we saw it a little bit with this wick here. Soon as we get near 60, people start to buy. Here a little bit too, went as low as 65, we went back up to 67. Then we dropped to 61, came back up to 69. So there's a lot of buyers in this region. Why? Because we are near the 50% retracement. There's a lot of people who use that calculation and they say if an asset has corrected, has exploded in value very rapidly, the chances of correcting 40, 45%, and 50% are high. Let's take profits and come back when it has corrected that far. Now that I say that, let's go and look at gold. Gold. So gold, how much has gold corrected? Let's have a look. This was the peak. Go back down and you open up this. Gold. Gold has not corrected 50%, but has corrected 26.7%. Okay, that was the max. So around 25%. So that means that gold investors are saying, when this thing's correct, let me look at 20% correction, 22, 23, 24, 25% correction. Between 20 and 25% correction, I'll get in because I took profits here. That has been happening now for gold. Now, silver, do I have something else to say? Same things applies a little bit for silver, corrected quite a bit. We're going to potentially start a new base here, not financial advice. We're near the MA 50 here in terms of the moving average. Moving average is still going up and to the right, which means bullish sentiment is still quite good. So positive in terms of long-term momentum, so it is good. Is it a good buying opportunity here for silver? Potentially, yes. You have to follow the market, but yeah, it has corrected near 50%. As it goes to 50, maybe even if it goes a little bit lower, 54, 55%, I think there's a lot of people who are going to see it as a bargain and start buying silver at these levels. Again, you need to have some type of conviction, some type of long-term view a plan to be able to discern when to get in, when to take profits, and when to get out. And these are all cyclical assets. Either you buy and hold for many, many years, or when you see things like this, when you see exponential progression in price, it is extremely rare that this parabolic move continues for months and months and months. Therefore, people who bought at $27 silver, if they sell at 118, sorry, 114 or 111, it doesn't change anything to them. So if they sell near the top here and come back here at 67, they can take part of the profit that they made to build back their position in silver, or at least the partial part that they sold at a bargain price, and then continue the trade for a longer period of time. So this is the situation for gold and silver. Now let's have a look at Bitcoin. This is Bitcoin on the weekly chart. Very, very different from gold and silver, who are above the trend lines. Bitcoin has corrected. It's in a bear market, and we have broken down below the MA50 on the weekly chart. So this is bearish. We are in a downtrend. It's bearish. It is normal. Bitcoin normally in the midterms years, every single midterm year, we have corrected the whole year or most of the year. So this is a cyclical thing that applies only to Bitcoin since its inception. Normally the rule is the following. I'll tell you guys, it's quite accurate, but I give it a couple of months of leeway, and you can even, let's say, give it 3 months. I'll explain what I mean by that. So the previous 2 cycles, so Bitcoin has 4-year cycles. 1 year when it goes down for the whole year, and then usually it starts trading sideways and goes up for the next 3 years. And in the 3rd year of that 3-year window, that's where the explosiveness of the price usually happens in terms of Bitcoin. That's what we have seen. So 1 year down, 3 year up, then 1 year down, 3 year up, 1 year down, 3 year up. That's what we have seen with Bitcoin. Okay, and the rule is the following: from the top, and you see here the top of the chart here occurred when, I'm going to tell you, it's first week of October of 2025. Normally 1 year, okay, after that, so October of 2026 would be the bottom of this correction for Bitcoin. And normally we get near the 200 week SMA. Okay, but we have corrected quite a bit already, and we're near that 200 week SMA. Sometimes we even go lower for a few weeks, and then we come back. That's normal Bitcoin behavior since Give it 8 years, and now it's going to be 12 uh, pretty soon. So, okay, mentioned is it first week of October 2025. Therefore, 12 months is 12 of first week of October of 2026. We are in March right now. Okay, March. So it means April, May, June, July, August, September, October. That's 7 months. 7 months remaining until we get to October 2026. But near October are potentially the best window to accumulate Bitcoin at the lowest price. It will be in that 1 year window if it repeats like the other cycles. So what I usually do is 3 months below that October and 1 month after is the best 4 month period to accumulate Bitcoin. So if you apply October 2026, so it means September, August, July, and June. No, sorry, 3 months. So August, no, July, August, September. So July, August, September. So from July 2026 up to November 2026, 1 month after October 2026, would be the window in which you can add every single week a little bit of Bitcoin every single week, and the possibility of catching the bottom in Bitcoin will be quite high based on previous history. It may not be exactly the same thing as previous cycles, but it has a tendency to repeat itself, and that's what I'm looking for. Now, so I said July 2026. We are in the end of March, April. April, May, June. And then July comes. We have 3 months. 3 months to accumulate cash, see if we can rotate some assets, take profits, or things like that, and accumulate cash if you want to increase your Bitcoin exposure, because normally beginning of July it's going to start to be a little more interesting to add to your Bitcoin position. I personally am already weekly trying to add a little bit of Bitcoin here and there. Why? The why is quite simple. It's because since October of, we are now, let's put it at the current price. Whoops. Okay. From the peak of October till now, the price of now, we are down 47%. Historically, with Bitcoin, we have corrected 80%, 70%, 65%, I think, in the previous cycles. Okay, 80, 70, 65, or something like that. Now we're already at 47%. We may have a extra 10. Let's say if you continue here and we go down a little bit, up to the moving average here, it's 54%, 55%. Now we're getting closer to the 65, 70% corrections that Bitcoin has. So, because I don't know what's going to happen in the future, I'm already starting to accumulate here a little bit and a little bit, and I'm not saying big chunks of Bitcoin or Bitcoin related stocks or ETFs at this stage. I am accumulating a little bit, not every week, but every 2 weeks or every 3 weeks. A little bit here and there. I know I may get a 10% correction from Bitcoin, or we may not get that correction. And if Bitcoin decides to go up from here, then I would have at least bought some Bitcoin related assets at these levels. And I will continue to pursue that until November of 2026, maybe even the end of the year, December 2026, because it's going to start to come back up. But because we don't know the future in terms of Bitcoin, then we need to build a strategy, decide what we're going to do, assign the assets that are going to be put into gold related assets, and then in silver related assets, then Bitcoin related assets, and also cash related assets. So that's something else to look forward. So in your portfolio, you may have a stock section. Like I indicated, I have a silver position, gold position, Bitcoin position. I have a stocks position, and I have a cash position. And let me talk a little bit about the cash position, because the cash position that I decided to choose is a little special. Some people have started to look into this. And my cash position right now, I think in my portfolio, let me check. It's about 5%. I have 5% in cash, and I decided to put that cash position in a strategy product that's called STRC. See it here, STRC. I'm going to show a little bit the chart after, so that people understand what it is. But I'm going to read what the website here says in terms of strategy, STRC, what it is, and how I use it. Again, not financial advice. I'm just sharing information for you guys. So STRC is a short duration high yield credit. Okay, and this is a Bitcoin derived asset. So stretch STRC is strategy's perpetual preferred stock that currently, right now, pays 11.5% in annual dividends. And that equates to, just give me 10 seconds, 11.5 divided by 12. That is 0.95%. So almost 1% return per month on your cash. Okay. So most of the people have a cash position in their portfolio, but it pretty much is just a cash position. It's not doing anything. Very few people have bonds or a asset there that gives them yield while they wait for deploying that cash into another position. Okay, so in my case, I have 5% of cash here. I'm gonna probably build a little more cash over time in this format because it gives a current yield of 11.5%. Okay, it could go up and it could go down. I'm going to explain a little bit how it works. So it pays 11.5 annual dividends payable every month in cash in your brokerage account. STRC's dividend rate is adjusted monthly. So strategy decides if it's increasing the dividend or lowering the dividend on a monthly basis, and usually there's a press release that indicates what they do each month. They adjusted monthly to encourage trading around STRC's $100 par value and to help strip away price volatility. This STRC is listed on NASDAQ, and it's available for most brokerage platforms. I'm in Canada, and I have access to STRC in my TFSA and RRSP accounts, which is tax efficient accounts. I'm sure you can have access to STRC also in a non tax efficient account too. Okay, so STRC characteristics is that strategy, the company will adjust the dividend to stabilize or push the price of the shares of STRC slightly above $100 and keep it there. Meaning that this high yield credit asset stays around $100 over time. That's the target. But while staying around $100 per share, you get a distribution of 0.95 currently, 0.95% of that amount of money that you invested in STRC every single month. So you're getting yearly 11.5%, which is closer to the performance of the S&P 500, which I believe websites state that it's 12, 13% or something like that per year, since I don't know how long. So slightly above 10%, 10 to 14%, I think is the range for the S&P 500. Here we are getting pretty much a guaranteed for now 11.5% dividend yearly if you park your money in STRC. And this allows the company, when it's above $100, what does strategy do? Let's say if the stock value goes to $100.05, Well, they start issuing shares of STRC. With the proceeds of issuing those shares, they're going to buy Bitcoin. But when they issue those shares, they bring the price down from 100.05 to 100.04, 0.03, 0.02, and eventually at 100 par. And then they stop issuing shares. Then they wait until the demand is strong enough and the price of the shares go up, and then they start issuing shares again until they get back to 100, take the proceeds and buy more Bitcoin. And they do this constantly. If the price goes below 99 and it goes to 98 or something like that, for extended periods of time, each month they will adjust this, and they could push the dividend price from 11.5 to 11.75. If they do that and the price is at $98, the demand for STRC will go up, share price will go up, and eventually it will come back to 100 or above. If it's above, STRC issues more shares, collects the money, and buys more Bitcoin. Rinse and repeat like that. And Strategy has also put quite a lot of money. I think it's over $1 billion now in cash within the financials of the company to be able to pay these dividends perpetually for the longest period of time. So when the STRC, for example, goes above 100, they could raise a little bit of cash. Instead of buying Bitcoin, they put it on the side and they build a reserve for future dividend payments. That's option one option. The other option is to ATM, which means they're going to take the underlying asset, well, the main asset, which is MSTR, the stock of Strategy, and they're going to issue more shares of MSTR at a premium, generate that cash, and then they decide if they're going to buy more Bitcoin or keep it in cash to pay the distributions of STRC. So there's a relationship between MSTR and STRC to raise cash for the dividends, but also STRC to be able to issue shares and buy more Bitcoin. That will allow the issuance of more MSTR and then eventually more STRC and buy more Bitcoin and so on and forth and so on. So this is a fairly new high yield credit product that is not paying 4%, is not paying 3%, is not paying 5%, that you may have access in your bank. Most probably in your bank, you're going to have an access of 0.25%, 0.5%, 0.75%, if you're lucky, 1% yearly. Okay, so here we're talking 10 times that amount easily, and it is approaching the S&P 500 performance. So some people are thinking, well, you know what? The S&P 500 is on average returning between 10 and 14% per year in the last, let's say, 15, 20 years. Let me just check that. I'm going to ask here on Google, just for fun, what is the return of the S&P 500 in the last 10 years? Thinking, na 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 na, ta da ta da ta da. Okay, it says over the last 10 years, approximately March 2026 to 2016 to 2026, the S&P 500 has delivered strong performance with an annualized return roughly between 14 and 15%. Okay, so it's 14 to 16%. Here we have 11.5%. Okay, but this is 11.5% on a high yield credit vehicle versus the S&P 500. Okay, the S&P 500 is riskier, it could be riskier than STRC. Let me just check what is the lowest return. What is the lowest return? Lowest return in a year for the S&P 500 in the last 10 years. Let's see if it says that. Okay, it says here, you look at this. From the 2016 period to 2025 period, the worst year was 2022, minus 19%, and the best year was 2019 and 2021 with 28% and 26%. So there's quite a big gap here. Plus 29, plus 27, minus 19, almost minus 20. In this case, you will get steadily 11.5 or 11.25 or 11.75 around that area in terms of yearly returns. Well, in this case is dividends versus the S&P 500. So what I'm thinking is that, is it worth it to invest in the S&P 500 long term if I can have a portion of my portfolio giving me passively 11.5%? And that's what I'm thinking right now. So what I'm doing is growing my cash position. Right now is 5%. I may be doubling it to 10% and taking the S&P 500 part of my portfolio, let's say stocks, and bring it down a bit and have the constant dividend here of 11%, 11.5% generated by this STRC, which I believe will be very, very popular asset. And the volatility is 2%. So it will not give you the moves here. Minus 19%, plus 29%, plus 27%. That won't happen. It's going to vary a little bit, but it's not going to vary tremendously. So that gives you certainty, and it's up to you to decide what percentage of your portfolio you put it here. And the dividends, you decide what to do with it. You reinvest them in STRC, or you put them in an ETF or a stock, or you keep it in cash. It's up to you. So it brings you quite a lot of flexibility. So we're going to finish with this. Let's look at STRC. And look at this. This is a weird looking chart. Okay, let me just put it daily. Yeah, so this is the daily chart. Look at this. Do I have it since inception? Okay. This is since inception of STRC, who started at 80, $88 or something like that. So I don't recall the initial dividend, but the initial dividend was not 11.5. I think it started something at 10% or something like that. So it started, they increased the dividend, price went up a little bit, and it came to the top of $98.50. Then these drops normally are, if you see it here, the dividend happens and the value of STRC drops. That's perfectly normal. Here it dropped a little bit, not much. Here it dropped again. Every time there's a distribution, you see a big drop in the STRC price. That is normal. It happens quite a lot. But recently it has been more stable than it was before, simply because over time they have increased the dividend from 10% up to the 11.5% that is currently at. Okay, but on ex-dividend date, you see these drops happen. Last one, it did not move tons. Okay, went as low as 99.44. The previous time it was 93. Previous time the bottom was 90. And the lowest it has been was 88 something. So it's tending to stay a little stronger. So it's up to you to decide when you want to get in STRC. Because if you come in after or on the day of the ex-dividend, usually there's a bargain in terms of share price. You're not gonna get the distribution, but you get a nice price. So if you get it at 94, 95, then strategy will play with the dividend or let the market come back, and you're gonna have like a $5. You could have a $5 gain plus the future dividends that are going to be given to you every month. That's why I'm using this STRC high yield credit part in my portfolio right now to start to replace the S&P 500 because has less volatility, frequent monthly distributions, highly predictable, and I am moving away from potential years where you have a correction of 20% like in 2022 in the last 10 years, but also I'm giving the potential to get returns of 29% or 27%. I want a steady flow of cash from that position within my portfolio to bring down the volatility of my portfolio, and I'm going to build up this position of STRC. Welcome to those coming in the live chat. If you have questions about investing, just put them in and I'll analyze an asset for you. If you want on TradingView, I'm open to that. The live stream will continue for a while. Now I'm covering STRC. If you're interested, it's a Bitcoin related fixed income tool that I'm using more and more in my portfolio as a passive tool to increase distributions and returns within my portfolio with lower risk, and it still be linked to Bitcoin. So, like I indicated, you have two options. Either invest right before the ex-dividend date at around $100. and get the distribution. So you get right away 0.95%, 0.96% every single month. Or you wait on ex-dividend date, you look at the volatility and buy the shares at a lower price. But then you have to wait a whole month for the next distribution. But if you get a good price, strategy and the market will work to bring back the share price as close as possible to 100 from the ex-dividend date dip that has happened in the last few months. So this is going to be a very, very popular tool for investors, especially retired investors who want steady income and are seeing quite volatile periods in the market. If you have a stable asset like STRC that is giving you recurrent, yearly performance of 11.5% on your money with very little volatility, and it gives you almost a 1% return every single month passively, I think many people will want to take part in this asset. Retirees will love that. We're starting to see companies who have built quite a bit of cash positions park their money for 2-3 months. When if you're talking millions of dollars in 2-3 months, you can get 2 or 3 distributions within that period, and it's a sensible amount of money for those companies that they know that they're going to be in a cash format. STRC is quite liquid; it's traded a lot, and therefore, for these investors, they're getting the yield if the money is left there for 3, 6, 9 months. And it's fairly liquid if they need it for their investments. They sell STRC, get the cash, and they can do whatever they want with that asset, and they keep the distributions. But when we're talking about millions of dollars, a difference between 3-4% versus 11.5% is quite substantial. So we are seeing individuals embracing STRC. We're starting to see companies in their cash positions starting to use STRC. So that is quite important. And that's what I'm building STRC within my portfolio. So now let's do some charting and wait for questions for everybody. Let's look at BTC. What is Bitcoin doing? For our chart for Bitcoin, let's see what it's showing. Trending, trend-wise. I haven't analyzed Bitcoin in a while, so let's look at this. This is the setup right now. We're going downtrend. We have corrected from the top of 72,000, found the bottom here at 65,000, and we were near that level also, 65,000 here. So the line in the sand right now is this. Something like this. So short term, we're looking at a 4-hour chart here for Bitcoin. That's what we have to look forward. We have touched the upper trend of this trend line. We're rejected. Again, each candle here is a 4-hour window. Then we have corrected, and we touch the previous low on, what's the date here? On the 8th of March, so that's 20 days ago. 20 days ago, we have gone up and down, and now we have bounce like we did here. We are actually doing the same thing here right now at 66, almost $67,000 dollars per Bitcoin. This is the level to look at is 65,400. If we give way of that support, then we need to look at the next level here, and the next levels, you see it here. It could be $63,000 and then 62,500. So these are the next two levels, 63,000 and 62,500. These are the absolute lowest we can we need to hold, because after that we're going much lower. Let me check. Look at this. Yeah. If we go lower than 62,500, now we're looking at, after that, $60,000. And $60,000, we're approaching the weekly SMA. So that's the status right now for Bitcoin. It has corrected quite a bit, but we're still on a downtrend for the asset. So 11:55, 5 more minutes, and then we'll GLD. Let's look at gold. Gold. So gold. Okay. For our chart in gold, let's have a look. So this is the main correction trend line for gold. We also have a base here, quite steep though, like this. So this is the situation for gold on the 4-hour chart. Corrected quite a bit from peak of 5,400 up to 4,000 that we briefly touched and bounced back, and now we're trading within this pennant or triangle structure. If we break down, we're going to retest again the $4,000 level, If we trend up and break to the upside, then we are looking to challenge $5,000 again for gold. That's mainly the situation. Has corrected quite a bit. We have got two big wicks here. First one here, second one here that was filled, and people are showing a little more interest in gold recently. And we have 2 minutes left. Let's look at the silver chart on the 4-hour. This one, I think it's even better. Oh yeah, this is pretty good. So we have the downtrend here for silver. Again, we found one wick, came back, lower low, and then went up, and then higher low. So this is the latest higher low for silver. Now let's zoom in here on the structure. You see it here. We have the 50-day SMA here. We're still quite far from that level. We went from $90 and even $96, then $90 to a low of $61, bounced back up to 75 almost, came back down to 66 and 75 cents, and now we're trading at 69. So we have a low, then a higher low, and then we start the structure. If we break down here, then it means that the downtrend continues, and we're going to retest again this level of $61 or $60. And then the 50 SMA is at $53 silver. That would be the lowest it could go before a strong bounce, in my opinion, in terms of silver. We will see. But again, both Bitcoin, actually all three, Bitcoin, silver, and gold have corrected quite a bit. And we are establishing a new base. For silver and gold, it's more clear that we have already started a base. For Bitcoin, we still have a gap, and based on history, we could still have a 5% correction, 10% correction still in the works until July or something like that, July, August. And after that, we should be able to stabilize a bit and start the next 3-year upward cycle that applies only for Bitcoin. In terms of gold and silver, we will have to look forward and see how the market reacts to the Middle East situation, but also the oil situation that is lingering, that's going to bring inflation, and the governments will have to react eventually. So I'm ready for that volatility that is going to come in the next few weeks and months. Be aware of that. Continue to DCA in the assets that you're investing. And if not, if you're scared a little bit, accumulate a little bit of cash and then start to strategize where you want to deploy that cash in the future. And again, like I indicated, if you're not sure, then STRC becomes a nice option where you put your money there and you get 11.5% monthly, or not monthly, yearly distribution. That it's almost 1% distribution per month at this stage, in a safe way, in a liquid way, and it can help you accumulate cash, get some distributions while you wait until you decide what to do with that dry powder. So again, thank you very much. We didn't have any questions, unfortunately, today. It's our second live stream. It's normal. We will see tomorrow if we get more participation. I saw people coming in and out of the live stream, 3, 4, 5 people or something like that. It's normal. They don't know me. They don't know what we're doing. Eventually, we will get subscribers in the YouTube channel, and then we will be able to notify these people. But again, if you look at the live stream, thank you for joining until the end. Please subscribe to the channel. We're building this sound money investing YouTube channel. We're going to cover gold, silver, digital gold, but I want to also help investors in terms of big long-term strategies. I am not too much into short-term, but more into planning and deploying based on my conviction. And I believe for the next 50 years, 100 years, sound money investing will be critical because the basement is 99.99% sure. Therefore, you need to protect your buying power. The only way to do it is to invest in sound money assets. Ciao, ciao, everybody.